All right, let's dive right into this analysis of LTC Properties' first quarter 2026 earnings. But we're not just going to rattle off standard quarterly numbers today. We're actually unpacking a massive strategic pivot, a near doubling of revenue, and a really telling stock purchase from a top executive. It honestly looks like a major corporate transformation is underway here, so let's walk through exactly how they're pulling this off.
Here's our roadmap for the explainer today. First up, a bullish insider signal. Second, we'll break down those Q1 earnings. Third, we'll explore their SHOP transformation. Fourth, we'll check on their financial health and dividends. And finally, we'll look at their future guidance.
Section 1. A bullish insider signal.
Okay, before we get completely lost in the dense financial filings and balance sheets, we really need to take a step back and look at human behavior. Just focus on this single number, $348,000. That is the exact amount of personal capital that David Boitano, the Executive Vice President and Chief Investment Officer of LTC Properties, just spent in early June to buy 10,000 shares of his own company on the open market. I mean, when a chief investment officer drops nearly $350,000 on his own stock, you really have to stop and ask, what does he know that the broader market might be missing?
And get this, it wasn't just some random one-off impulse buy. Nope, this was his fifth purchase in just the past 13 months. He now directly holds over 46,000 shares, which brings his personal stake to over $1.6 million. You know, there are plenty of reasons an executive might sell a stock, right? Paying taxes, buying a house, diversifying their portfolio. But there's generally only one reason they buy stock on the open market: they confidently believe the price is going to go up. It's a profound, tangible signal of conviction from the exact person executing LTC's internal investment strategy.
Let's move right into Section 2. The Q1 2026 earnings breakdown. So, what is actually motivating all that executive confidence? Well, to really get LTC's earnings, we've got to clear up a little bit of jargon first. LTC is a real estate investment trust, or a REIT. Now, in the REIT world, standard net income can actually be pretty misleading. That's because accounting rules force companies to deduct massive amounts of real estate depreciation, even though in the real world, property values often go up. So the absolutely crucial thing to remember is that investors look at FFO, which is funds from operations, and FAD, funds available for distribution. These metrics strip out all that non-cash depreciation and give us the true cash flow reality of the business.
And when we look at the reality of their business right now, wow, it is booming. Back in the first quarter of 2025, LTTC had total revenues of $49 million. Fast forward to Q1 of 2026, total revenues absolutely skyrocketed to $95.4 million. That is a near 100% year-over-year jump. We're talking about an absolute explosion in top-line growth for a company that has historically been, pretty slow and steady.
And all of that revenue translated beautifully right down to the bottom line. Net income available to common stockholders came in at $23.4 million, or 48 cents per share. But remember those key cash flow metrics we just talked about? Core FFO hit $33.7 million, and Core AFAD reached a very healthy $35.3 million, which comes out to 72 cents per diluted share. This essentially means there's incredibly strong, tangible operational support holding up the entire business right now.
Section 3. The SHOP transformation strategy.
Look, you just don't double your revenue by accident. The secret sauce behind all of this is what they call SHOP, which stands for Seniors Housing Operating Portfolio. So historically, LTC relied really heavily on triple net leases. That's where they basically just own the building, the tenant pays a flat rent check every single month, and that tenant handles all the taxes, insurance, and maintenance. It's super safe, but the upside is totally capped. This SHOP transformation is a massive structural shift. Instead of just sitting back and collecting flat rent, LTC is now directly partnering in the actual operations of these senior housing facilities. Yes, they take on a bit more operational risk, but they capture way higher operating income and revenue upside when these facilities perform well. That operational shift is exactly why their top-line revenue just doubled.
And to give you an idea of how management is viewing this, just listen to what co-CEO Clint Mallon said in the earnings release. He stated, "We have strong conviction that our SHOP strategy is the right one to create a higher growth profile company with better risk-adjusted returns to drive shareholder value." He's explicitly telling us that this isn't just about growth for the sake of growth, right? It's about securing better risk-adjusted returns for the shareholders.
So how is this actually playing out on the ground? Well, they are executing this strategy incredibly aggressively. They closed $108 million in SHOP acquisitions in Q1 alone, including a really large portfolio in Georgia. Then they added another $9 million acquisition in April, and they anticipate closing a staggering $250 million more in the second quarter. In fact, co-CEO Pam Kessler noted they're projecting around $600 million in total SHOP acquisitions for the year. Their ultimate goal here? To grow the SHOP segment from about 29% of their portfolio all the way to 45% of their gross investments by the end of 2026. This is a complete top-to-bottom reshaping of their portfolio.
Section 4. Financial health and dividends.
Now, going on a massive shopping spree like that takes deep pockets. So can their balance sheet actually safely support both this aggressive growth strategy and their regular shareholder payouts? Their Q1 quarter 2026 press release gives us a pretty clear answer. Look at their pro forma liquidity. LT boasts $583 million in total pro forma liquidity. That includes cash on hand, $373 million available under their unsecured revolving line of credit, and over $190 million available through their ATM equity program. They absolutely have the capital buffer and the dry powder necessary to execute hundreds of millions of dollars in acquisitions without dangerously over-leveraging the business.
And if you're a reinvestor, I know exactly what you're thinking next. Is my dividend safe during a transformation like this? The answer is clearly yes. LTC declared and paid a Q1 dividend of 57 cents per share. Now compare that to their diluted funds available for distribution, their actual true cash flow metric, which came in at 74 cents per share. So the dividend is comfortably covered by their real cash flow. This leaves them plenty of room to reinvest in that aggressive SHOP strategy while still safely rewarding their shareholders.
Finally, Section 5. Guidance and future outlook.
So Q1 was clearly a phenomenal quarter. But what's next? Well, in their earnings release, management officially reaffirmed their full-year guidance. They are projecting diluted core FFO between $2.75 and $2.79, and diluted core FAD between $2.82 and $2.86. Reaffirming this guidance is huge. It tells us that the massive Q1 performance wasn't just some crazy fluke. Management fully expects these strong, consistent operational metrics to hold remarkably steady throughout the entire year as they keep integrating all these new properties.
But you know, a key part of that future outlook actually involves addition by subtraction. As they aggressively add these seniors housing operating assets, they are also actively divesting from their older legacy assets. Specifically, their exposure to skilled nursing centers is set to drop from 46% of their gross investments at the end of 2024 all the way down to roughly 33%. They are intentionally pruning the portfolio, making way for newer, more profitable, and higher growth assets. So I really want to leave you with this final thought. We've just seen a safely covered dividend, a near 100% jump in revenues, and a chief investment officer personally pouring hundreds of thousands of dollars into the stock. LTC Properties isn't just surviving the current real estate climate, they are actively and aggressively transforming themselves to capture higher operational yields. So, is their bold pivot to the SHOP model the new blueprint for success among healthcare REITs? The data from Q1 certainly makes a compelling case. Thanks for joining me for this analysis, and keep learning.